you'll see stocks just tank because there are air pockets under equities when they're at record valuation levels. Historically, we've been close to these valuation levels a few times in the past, and every single time there was a gigantic crash afterwards. So if history means anything right now, we're headed for turmoil in 2017. There are just so many black swans out there waiting to happen. So many crazy things that could terrify the financial markets, and you only need one.
Welcome back to Rethinking the Dollar. Today I'm excited to have my guest, a returning guest, Mr. John Rubino, creator and editor of DollarCollapse.com. John is a well-known monetary and economic commentator that writes on various syndicates as well as appears on various websites around the web. John is the most notable as a co-author of the best-selling book, The Money Bubble, and The Collapse of the Dollar and How to Profit from It, along with James Turk. So, John, welcome back to Rethinking the Dollar.
Thanks for having me back, Mike. It's been a while.
Yeah, it's been a while.
A few things have happened since the last time we talked.
Yeah, a lot of things has happened. I'm looking forward to getting your take on how this year comes to an end and how we get into the next year and how that all unfolds. So, before we actually get even further, I want to give me what's on John Rubino's mind. What's of concern to you as we close in on this year, and what are you keeping your eye on the most?
Well, things really haven't changed fundamentally. Okay, we've had a lot of political stuff go on, obviously, and a lot of political stuff is continuing to go on around the world. But the fact remains, we're just borrowing too much money. I mean, there's nothing mystical, magical about debt, or even ideological about it. But, if you borrow too much money, your life spins out of control. And the entire developed world and a lot of the emerging markets are just borrowing too much. For the last 30 years, we've been taking on more and more debt every year. And we're reaching the point where more debt doesn't do us any good, and in fact hurts us, and that's why the world seems so chaotic right now. Financial crises cause political crises, which then feed back into financial turmoil, and that's the stage of the process that we're in. So this is all playing out pretty much according to script, and the last act of the play is pretty horrific. So that's what my focus is on.
Yeah.
How this all ends, and it has to end badly, one way or another.
All right, and last time we spoke, during the whole political cycle, I don't think we were this far along as far as President-elect Donald Trump really being the forerunner or the guy who would come across the finish line, but which it looks like he is as of now. So what are your thoughts on Donald Trump, the hotel mogul, guru guy, becoming our next or our 45th president? What are your thoughts on that one?
Well, he's an outsider, obviously. And as such, he's a symptom of the problem, which is that the big systems that have been created by the monetary and political elites of the past 30 years don't work anymore for regular people. The average guy sees his factory job being shipped to Mexico and his savings evaporating because he can't earn any interest on his bank account, et cetera, and has come to believe correctly that the 1% is basically harvesting the 99%, that he's a victim of the current system. So people like that are open to a message like Donald Trump's, where he stands up and says, yeah, the system's rigged against you, so I'm going to tear it out by the roots and start over. And so Trump can get away with saying all kinds of other crazy stuff if he says that first, that the system is broken and it hurts you and I'm going to fix it. So people don't really care beyond that because they want somebody to acknowledge the fact that their life troubles aren't their fault, that they didn't ship their job to Mexico and they didn't make interest rates go to zero on bank accounts and all the other stuff that's going wrong in the lives of regular working people, that it was imposed on them. And therefore, somebody's got to pay for it, and it's got to be fixed. Trump's the only one who said stuff like that. Yeah. Actually, from the left, Bernie Sanders said things like that, too. And he generated a lot of votes. It's possible that if the Democrat primary system had been run honestly, we would have seen a Trump-Sanders campaign for the presidency this time around. And that would be basically two outsiders and a total repudiation of the political system as it now exists. So what Trump does going forward is anybody's guess. We still don't know, but based on the things that he's proposing, we're going to have a massive increase in government spending, most of it going towards defense and infrastructure, and a huge increase in Fed money creation in order to pay for the huge increase in government spending. And that's basically, as I said, more of the same. Increasing government spending, running big deficits is something the Obama administration perfected. President Obama's administration in 8 years borrowed more than all the previous US administrations put together, from George Washington all the way up to George W. Bush. Obama took on as much debt at the federal level as all of those guys put together. Trump looks like he's going to do the same thing. George W. Bush built up the military dramatically and increased government social spending, even though he was supposedly the head of the small government party. And so Trump is going to do that too. So it doesn't look like there's any fundamental change taking place, except in a matter of degree. Trump might do more than those guys do.
Yeah. And that's no, and that's one thing that actually bothers me. All the lip service that was, given out during the debates about what he's going to do that really resonated well with people who are suffering. But yet he's saying those things, being that he is, the 1%. So real reform would really come back to hurt him if he was really take away the system and the banking structure, which has profited him so well. So I really could see him, really, diving deep into those issues, because that's how he's made his fortunes, kind of, sort of. So that's why the whole thing of lip service, I think I'm kind of leery on whether or not he'll actually deliver on those promises, because it will affect him as well.
Well, from a libertarian standpoint, which is kind of the way I approach political developments, the Trump and in general Republican platform had some interesting stuff in it. And one of the really interesting things was, essentially the breakup of the big banks by the reimposition of Glass-Steagall, which was a law that was passed after the Great Depression to separate commercial banks, which the government guaranteed, from investment banks, which were going to be allowed to fail if they screw up. Under the Clinton administration, we eliminated that distinction and allowed these gigantic banks that do everything for everybody with insane amounts of risk to evolve. Trump said he was going to fix that, but you don't hear that anymore now. You hear, oh, he's naming a Goldman Sachs executive as Treasury Secretary, and can you imagine him going to his Goldman Sachs executive guy at Treasury and saying, oh, break up the big banks, destroy the lives of the guys who you worked with for the past 30 years. It's not going to happen. He's going to tell Trump all the reasons why that can't be done, and it probably won't get done. And that's a shame, because that was one of the few things that Trump was proposing that I really thought was useful. So, from the point of view of his business, an infrastructure build out is a great thing. So some of his proposals will be good for, the business that his kids are now running and that he'll go back to running after he leaves office. So in that sense, you could see a lot of what he's doing as, hey, self-interest. He's there to increase the size of his fortune. And he might end up doing that. But if he doesn't break up the big banks, it's going to be hard to accomplish a whole lot else, because that's really the epicenter of the problem. The fact that we've created this oligopoly, or an aristocracy, of bankers and politicians who go back and forth. The guys from Citigroup and Goldman Sachs and JP Morgan Chase, with each new administration, they come in and they run the government. And then when they're done, they go back to the private sector at huge increases in pay. And same thing with regulators. They go back and forth. It's a revolving door, where your government job is basically an extended job interview for the real money that comes when you go to work for a hedge fund or a high frequency trader or for a lobbying firm. If you don't eliminate that revolving door and stop the symbiosis between government and financial sector, nothing else is going to get fixed. And it doesn't look like that's going to happen. So it looks like we're going to get a bigger, more aggressive version of George W. Bush and Barack Obama in terms of government spending and borrowing. And that's just taking us to the next stage of the process where we get this gigantic financial crisis because of all this debt, and that's really the thing to pay attention to. The system is going to melt down at some point.
Now,
and if you're managing your own money, you got to be careful about how you prepare for that eventuality.
Right. Now, there's been a lot of talk recently about, the idea that for several indicators has kind of pointed at a recession. Are you of the opinion that we are currently in a recession, or one's coming, or how will all that play into 2017?
Well,
where we're at? Slow
the
growth,
current
no
state of the
growth?
economy is really interesting right now because we're clearly headed for a recession. But what happened in the last year is that the federal government ramped up its spending and borrowing dramatically, which isn't a surprise. In election years, the guys in power always try to use the machinery of government to get their people elected. And so the Obama administration aggressively increased spending and borrowing. The federal government increased its debt by like $1.8 trillion in just the past year, at a time, at the peak of a recovery when we should be paying off debt, or at least not borrowing much. And that money was spent in order to get Hillary Clinton elected. And so we're seeing good numbers because of that. Just in the last few days, GDP for the second quarter was revised up, and employment numbers increased dramatically, and a few other things came out that make it look like the economy is growing at a nice pace. So those would have been the kind of numbers that Hillary Clinton and Barack Obama could have stood on the same podium and touted, as there was the transition if she had gotten elected. But now they're kind of benefiting Trump because it makes it look like the economy is in actually pretty good shape, and that it's growing because of newfound optimism because he's in office. But really, what it was is we just borrowed a ton of money and we spent it. And historically, the way that plays out is that the government has to rein in its spending a bit when a new president takes over, because you can't just stay at that extremely high level, borrowing a couple of $1 trillion every year going forward. That's a recipe for disaster. So the new administration comes in and they've got this honeymoon in which to put out a little bad news, and so the economy slows back down again in the first year of the new administration. So if that's the way it plays out, we ought to see lower government spending and a slowdown in the economy to offset the artificial increase in growth that we saw in 2016. Maybe that tips over into a recession. We're so fragile right now that any kind of a crisis would lead to a huge disruption in the financial markets. And we're seeing signs of that already as interest rates spike. Long-term U.S. interest rates are going vertical right now. The 10-year bond has gone from like $1 or from 1.3 something percent to 2.3 something percent in just the last 6 months. And that's a huge increase, which works out to a huge tax increase on most of the world, because rising interest rates force you to pay more for interest, obviously, on your loans. And that takes away from what you could have spent on productive activity. So I have written a series of articles on DollarCollapse.com with the initial title of Variable Rate World. And the gist of it is that basically everybody in the world has borrowed money on variable terms. Governments have borrowed very short, which means they have to roll their debt over year after year. And as rates go up, they have to roll their debt over at higher and higher rates. Corporations and individuals have a lot of money that's tied to the LIBOR rate or the prime rate or credit card rates. So when interest rates go up, you see your interest costs increase, and that's what we're staring at out there now. So the government can cut taxes and increase spending, but if interest rates soar during that process, that fact, higher interest costs, cancel out all the stimulus benefits of the other stuff the government is doing. And you end up with a slowing economy because so much is being sucked out of productive uses via higher interest rates. And that's something that we're staring at right now because it's already happening. So let it go on a little bit longer and let the dollar go up in the process. Then American corporations get this double whammy where they see their borrowing costs soar, and the price of their stuff in foreign markets goes up because they have to price it in dollars initially. And so corporate profits will crater if these two trends continue.
Yeah. Now, my next question is going to be the idea that it seems like there's a major bond sell-off as
Yes.
while the dollar is at recent highs. How is all that factor into heading into next year? If the dollar continues to rise in value for the most part and the bonds continue to sell off, how does all that weigh out? I mean,
Well,
what does that mean?
yeah, a rising dollar and rising interest rates at the same time is like a big tax increase. So it slows the economy down, other things being equal. And that will offset a lot of what the government tries to do in the year ahead if they go for a stimulus plan right away. So it's possible that it doesn't matter what the government does on the fiscal side. If interest rates are soaring, that's going to be the dominant story. And it's a really scary story because, to take just one example, stocks are priced in relation to bond yields. In other words, you look at what you can make on an IBM stock, for instance, and you compare that to what you could make in treasury bonds. And if you're going to make 10% in IBM stock, and treasury bonds yield 1%, then IBM stock is a really good buy. But if you're going to make 6% in IBM stock and treasury bonds yield 6%, then you don't want to bother with the risk in IBM stock. You just go to something safe like treasuries. And so to the extent that treasuries go up, stocks get less valuable. And the US stock market is priced for perfection right now. It's at all-time highs. And that implies that people buying stocks think that things are going to be great going forward. And if they're not great, in other words, if interest rates go up or the economy slows down or any number of other things happen that are scary out there, you'll see stocks just tank because there are air pockets under equities when they're at record valuation levels. Historically, we've been close to these valuation levels a few times in the past, and every single time there was a gigantic crash afterwards. So if history means anything right now, we're headed for turmoil in 2017. There are just so many black swans out there waiting to happen. So many crazy things that could terrify the financial markets, and you only need one. We should talk about, if we have time, European politics now, because that's another potentially big deal that has nothing to do with us right now, except to the extent that President Trump is a sign of the process that's now playing out in Europe. And that could terrify the markets too.
Yeah, I've seen a lot of right when President-elect Trump was kind of given the go ahead to become next president. I saw a lot of countries coming out with their prime ministers saying, I expect to have great relationships with Trump, and our country is going to work well together. I saw several videos of like the prepping for, hey, we got to work together now to keep this thing going, or something else is going to happen. So let's get into Europe, the banking sector in Europe. It was recently brought to my attention that Royal Bank of Scotland is going through some things. Of course, Deutsche Bank has always been a problem, and the Italian banks. And so, there's so many banks that are waiting to, collapse, fail, be bailed in, or however it plays out. But what are your thoughts on that? Which is there any leading indicator of which bank may be the first one to, cause the dominoes to fall, or any one of them can fall at the same time?
Yeah, the European banking system is a minefield right now, and part of it is because these big European banks were told by their governments that if they own government bonds, that they can count that as risk-free capital and then use it to lend lots of money against. It's collateral for many loans in which they can generate huge profits, ideally. But they didn't differentiate between good quality European government debt and bad quality. So these big banks were told that owning Greek debt and Italian debt was just as good as buying German bonds, for instance. So they loaded up on the Greek and Italian debt, which had a higher yield. And for regulatory capital purposes, that ends up being the same thing. And so now these guys are stuck with this crappy paper at the core of their balance sheets, okay? And they don't know what to do with it. And the Italian banks are probably the biggest, most immediate problem right now, because, they're in Italy, a country that really doesn't work, and they've got huge amounts of bad debt. So they have lent a lot of money to Italian companies who aren't paying them back now. And their bad debts come to something like 16% of their total loans. And that's fatal for a bank, bad debt at that level. And the Italian banking system across the board is in that kind of a boat. So yeah, the Italian banks, if they weren't propped up by their government and by the European central banks, would blow up tomorrow. The whole banking sector would just cease to exist. And that would pull down the second biggest company, or the third biggest country in the European Union, which is Italy, and start a banking crisis that spreads across the continent. Well, we're close to that because the Italians have a referendum coming up this coming Sunday on December 4th, in which it looks like they're going to vote against a series of constitutional changes. And the sitting prime minister said he would retire or resign if that happened. And the guys waiting in the wings are anti-EU and anti-Euro. So you would see, another political earthquake at the center of the Eurozone and the European Union. And then you've got French elections coming up right after that, in which a right-wing candidate is running against a far right-wing candidate. Neither of them are that reassuring from the standpoint of what is basically a socialist political system in the European Union. So you've got problem after problem bubbling up in Europe right now, and the drumbeat is just going to be unrelenting in 2017. And that is if the banking system doesn't blow up before that, because the European or the Italian banks are right there. They're right on the edge of the precipice. And the question then becomes, do they fall over the edge, or do the governments of the European Union and the central bank of Europe step in and bail them out with huge amounts of taxpayer money? And what does that do to the value of the euro? Yada, yada. You get all these secondary effects that are unpredictable. So that's Europe, and then you got Japan and China. It just goes on and on. The rest of the world is a huge mess.
Yeah.
And it makes the US look good by comparison, even though we are fundamentally in terrible shape. It's just that we're the least bad out of a really, really horribly over-leveraged world right now.
Yeah, I want to get into currencies. And speaking about Europe, I just saw recently that the euro and the dollar is almost at parity for the most part. Now, do you see if all the problems continue to happen out there, things get worse, that there be a breaking point where the dollar becomes stronger than the euro, to where it'd be favorable for tourists to Europe finally to go over there and actually have a better time as far as spending?
Historically, when a country gets into financial trouble, one of the things that they've done is devalue their currency, because that makes it easier to sell stuff abroad. And like you said, it makes it cheaper for tourists to come visit. So, if your currency is cheap, you make more money. And that helps to bail you out of the stupid financial mistakes you made in the past. And that's what you would expect the European Union and the Eurozone to look at going forward. They've got to find a way to keep Italy and Greece and Portugal and Spain within the common currency. And one way to do that is to aggressively devalue the euro to make it easier for the Italians to sell their cars and their wine, et cetera, to the rest of the world, and in that way ease their financial burdens. So you've seen that already with the euro plunging in value lately. So it's the beginning of what you'd expect, when a system gets into financial trouble, a devaluation of the currency. But this isn't enough, probably, to save them. So they're going to have to devalue much more aggressively going forward. So you might see a euro that's worth 75 cents, where before it was worth $1.30, $1.40, not too long ago. And so that's a huge decrease in value. And it leads to instability in other ways. Who wants to buy European bonds when those bonds are going to pay you in euros that are plunging in value? So maybe you get a spike in European interest rates that destabilize the Eurozone. You just can't know what happens when you aggressively devalue your currency. And that's what Europe is looking at right now. They don't really have any other options. But if they do that, they're going to hurt their trading partners, who then have to respond in kind. In other words, if the dollar just soars against the euro, our companies can't sell anything to Europeans because suddenly the price is 70% higher than it was 2 years ago, whatever we're trying to sell them. And that hurts us and forces us to respond. And that's basically what's called the currency war, where you have companies or countries going back and forth, devaluing their currencies. And it eventually turns out to be basically a zero-sum game where you have a temporary winner and a temporary loser, and then they switch sides because the loser devalues even more aggressively than the winner devalued before, and et cetera, et cetera. So you get this downward spiral of currency values until something happens to stop the process. Either you have a massive currency crisis where nobody wants to hold any of these fiat currencies anymore, or everybody wises up and cuts a deal to stabilize the value of their currencies. Jim Rickards, who is arguably the best thinker on this subject out there, says that eventually the governments of the world will figure out that there's only one thing they can devalue against that is permanent, and that's gold. Everybody will go back to some kind of a modified gold standard where our currencies once again become just names for a certain weight of gold. And that will cause this burst of inflation because we have to have a much higher gold price in order to make that work. So let's say that the dollar becomes 1/10,000th of an ounce of gold. That is the definition of a dollar. And gold is $10,000 an ounce at that point. Well, everything that you owned that used to be dollar denominated will change in price really dramatically if that happens, because the dollar is going down in value when you do that. So you have this burst of inflation where everything goes up in dollar terms. And people with bank accounts and things like that lose a lot of money because their dollars in their bank account become less valuable. But then you go forward with a sustainable monetary system. And I think something like that is coming one way or another. It might happen coherently in the Jim Rickards scenario, or it might happen chaotically via a series of gigantic financial crises that basically wipe the slate clean and create a debate in which the sound money guys win, and then we set up a system going forward that works. Probably the latter is more likely, because democracies don't like to change unless they're forced to, because the systems as they're now set up have a lot of constituencies that benefit from the way things are now. They won't give up that power and those benefits lightly. It's going to take a crisis probably to make it happen. And that's why 2017 is such a fascinating year. That's when it could happen. You know, that's when the crisis could hit. And if it does, it'll be unlike anything we've seen before, because we've never had this much debt. You know, the 2008-2009 financial crisis almost blew up the global financial system. And instead of figuring out that debt was the cause of the problem and then scaling back the amount of leverage in the system, we actually went the other route, and we tried to get out of that crisis by taking on even more debt. The global economy has taken on something like $100 trillion of new debt in the past 7 years, a lot of it in China, but quite a bit of it also in the US and Europe. And always in Japan. You know, they just continuously borrow. So that now we're even more heavily leveraged, more highly leveraged than we were back then. And the crisis, when it comes, will be that much more serious. So it's likely that the next financial crisis, whether it's 2017, 2018, or somewhere in the intermediate future, when it comes, it's going to be a monster. And it's going to cause things to happen that are completely unexpected by mainstream economists and politicians, and very hard to deal with for the systems as they now exist. You know, we might hit a point where the central banks just can't stop what's happening, and governments, no matter how much they spend, can't stop it because increasing spending makes it worse. And that's what we're looking at out there somewhere. And when it comes, it'll just be an extraordinary time. Historians are going to be writing entire books about the coming decade.
Right. Now, I was thinking of while you're saying that, you know, your most latest book, The Money Bubble. So it sounds like basically when the bubble pops, that's when everything will break loose. So that's going to be a very uncomfortable, unpleasant experience for the world, because it's all based upon the Federal Reserve note. Now, as we draw towards the end, I want to get your take on, we're talking about currencies. And of course, what's been on my mind the most and what I've kind of been following the most is the whole Indian rupee, and how they just removed apparently 86% of cash from the citizens' hands in the form of what they call black money or whatever. You know, like how can you overnight just rob your citizens? I mean, they have what, a couple billion people there that woke up one day and had to scramble to get rid of paper. What are your thoughts about that? I mean, how does that fare? And can that be something that can happen here with, say, a $100 bill and a $50 bill one day?
Well, there is something called a war on cash that's been going on, where governments have pushed interest rates down into negative territory, and they can't go any further negative if people are able to just to take their money out of the bank and keep it in cash. Um, and that has led a lot of economists to say, well, we need to get rid of cash, at least the big bills, and eventually all cash, and everybody should go electronic. And that gives the government the power to set interest rates basically anywhere to continue the financial circus that we have now for a bit longer. Now, India isn't quite an example of that. They have sort of a separate problem, which is that most people don't have bank accounts. They operate in cash, and because of that, they don't pay taxes. And the Indian government would like people to report their honest income and pay taxes, so the government can get what it considers to be a fair amount of the economy as tax revenues and allow the government to operate as it wants to operate. So they decided to make some of the relatively big Indian currency bills illegal. They just said, this is not money anymore. And, it caused chaos. It just, because so many people don't have bank accounts.
Right.
And so many people are really not in the habit of keeping track of their income in order to report taxes. So a lot of stores just aren't doing any business, and businesses are shutting down, and people are protesting. And
no, but what's funny, as you mentioned that, what's funny is the fact they removed the 500 and 1,000, but they introduced a $2,000 rupee, and apparently there's a scramble now because no one can exchange it because there's no smaller bills, and it's just that the headache of having to carry smaller bills now to make change for that too big bill. So yeah, it's not by coincidence, I'm sure.
This was done really incompetently. I think that this isn't an example of an all-powerful global elite harvesting the masses, which you can make the case that that's what we're seeing in the developed world. This was just a developing country trying something that really didn't work.
Yeah.
And they'll I have no idea what they'll do next, but presumably they're going to walk back some of the stuff that they did because it clearly didn't work. It didn't succeed in getting the government the result that the government wanted. So they'll do something next, and hopefully it won't be what they're talking about, which is a ban on gold imports, because that's another problem for the government. Is Indians have a memory of their currency being inflated away. So they don't trust paper currency. So when they have, for instance, a wedding, everybody gives the bride and groom gold as a present. And it's in the form of jewelry, but it's really money in the sense of it being a store of value. So they give them something that they can put away and that will protect them from financial crises going forward. Well, from the government's point of view, that sucks a lot of productive capital out of the economy. And they're trying to do something about that too. They're trying to convince people to stop just hoarding gold and monetize it in some way. In other words, sell it and get cash and spend the cash, or put it in a bank account and use that bank account to buy stuff and start businesses and things. And that's not really working either. People like their gold in India. And they're the second biggest gold buyer in the world after China, who also has kind of a similar cultural affinity for sound money. And so it's clear that India, from its point of view, still has this problem. They don't know what to do about it. So there are rumors that they're going to just ban imports of gold and say, okay, from now on, we're not going to buy any more gold from the rest of the world. And that is also a big deal for the gold market, because if India, the second biggest buyer of gold, just flat out made it illegal, which has some historical precedent. We did that in the U.S. In 1934, we made gold ownership illegal for American citizens. So it could happen, and that would disrupt the gold market temporarily, but it might also be good for the price of gold in the Western world, because it would be such a sign of weakness on the part of the Indian government that it would spook the financial markets, who maybe see India's flailing around and doing crazy stuff like that as a sign of things to come in the rest of the world, and cause everybody to load up on gold and silver now in anticipation of other countries doing crazy stuff like that.
Yeah.
So there's no way to know exactly how that plays out, but it does fit into the general mosaic of countries just realizing that what they've been doing isn't working anymore and trying almost random stuff to fix things. And none of it's going to work because debt is just what it is. If you owe more money than you can ever hope to pay off, that's your problem. And there's really no solution for that from a personal standpoint or from a national standpoint. You got to get rid of the debt somehow.
Yeah.
And there's only two ways to do it. You have to inflate it away, or you have to collapse and have the debt disappear via everybody defaulting on it. And we're trying to inflate it away, but there's no guarantee we can succeed because we've never been in a situation where the whole world is doing it at the same time. That's uncharted territory. Therefore, how it plays out is hard to predict. But I think you can say with certainty that it will be chaotic. There's no way that this is going to be smooth and placid and take us from over-indebtedness to a sustainable financial system without immense amounts of pain and frankly, terror in the financial markets.
Yeah.
And so that's been kind of my beat for the last decade is watching this chaos unfold and trying to figure out how to predict what's going to happen in at least the short and intermediate term to allow people to invest successfully for the stuff that's coming.
Yeah. Well, it sounds like 2017 will be the year, the mystery year, where the money bubble may pop, or who knows what happens. So it's going to be definitely a good year to, definitely, keep an eye on everything, it seems like. And, I had Mr. Jim Rogers on as my prior guest, and he was like, Mike, be very worried. Be very worried. I'm like, Jim, I don't really want to worry that much. I'm trying to be optimistic, saying it's going to be okay on the other side. But he was saying, worry, worry, worry. So what would you tell people for 2017? How to prepare? Give me some small tidbits on what to keep an eye on immediately and how to, position yourself.
Yeah. Okay.
And not worry.
One of the themes, and you should definitely worry, but sometimes worry is a good thing because it leads you to think through your situation and act accordingly. You can't be complacent if you pay attention to what's out there. And there are things you can do that might work. I think one of the themes of the next few years is going to be a transition or a migration of capital from financial assets like stocks and bonds that are going to really suffer in the coming instability to real assets that will hold their value better than, for instance, treasury bonds or growth stocks or something like that. And so you'll see a lot of money flowing into stuff like farmland and well-chosen energy assets and extremely prudently chosen real estate, and of course gold and silver. Those metals are the kinds of money that we used to use back before we started going to fiat currencies with circulating paper and electronic money. And they've held their value for 3,000 years. A gold coin, an ounce of gold, bought you a pretty good man's toga during the Roman Empire. And today it buys a decent guy's suit. It's held its value through all of the turmoil that we saw for 3,000 years. Empires rose and fell. We had wars and then world wars and depressions. Gold stayed valuable that whole time. So it's a relatively safe bet to hold its value no matter what comes. And since we can't predict with any kind of certainty what's coming, except that it's going to be messy, gold becomes a safe bet and something that allows you to sleep at night. Whereas if you've got a stock portfolio, that's going to keep you up. And if you've got a bond portfolio, that's going to maybe have you heading for the window to jump out, because it's really the epicenter of the next crisis. And because of that, tons of money are going to flow into relatively small markets. Gold and silver are just not that big compared to the stock and bond markets of the world. So when panicked capital starts all heading for the exits of stocks and bonds and the entrance to gold and silver at once, you're going to see those things gap up on a daily basis. $100 up days for gold will become common and $10 up days for silver. And at that point, it's going to be hard to get physical gold and silver. You can call your gold dealer and say, hey, give me some Krugerrands, and they'll say, sure, give me your money now, and in 3 or 4 months, I think we might be able to scare up some Krugerrands for you. Well, that's not going to be something that helps you sleep at night when your money is with the gold dealer, but you don't have your Krugerrands yet. And so it makes sense to start now in arranging your finances in a way that will be consistent with what's coming. So, if you can buy a nice rental property in a stable college town, that'll probably hold its value. And it's possible that the best quality oil stocks, for instance, are an okay place to be, and some gold and silver coins are good things to own. If you buy some now, you get them at a price that'll be extraordinarily low by what we're going to see 5 years from now, let's say. And they're available today, so you can get some silver coins, even if you don't have a ton of capital to throw at it. Silver's not very expensive. The premiums on silver coins aren't outrageous, and they're available. So you can get some now, and that's probably a good place to start. And that will allow you to at least have something where, okay, this is going to hold its value. I'm going to be at least okay with this part of my finances. And you get the peace of mind from knowing that you're at least partially set up in a way that will probably protect you and possibly make you a lot of money going forward.
Well, John Rubino, it was great talking to you, my friend. Looking forward to staying in contact with you as we head into 2017, and definitely have you on hopefully then and get your take on what's going on at that point. Hopefully nothing too bad. But other than that, give the audience a chance to follow your work, stay in tune with you. For those who may not know you, may come across this interview for the first time, how can they get in touch with John Rubino and continue to follow your work?
Sure. I run DollarCollapse.com, which is a website that is updated continuously and covers a lot of the stuff we talked about. My most recent book is The Money Bubble, co-written with Gold Money's James Turk, and it's available on DollarCollapse and at Amazon.com.
Well, John, have a good day, and definitely finish off the year strong. I look forward to continue to follow your work and you keep doing what you're doing. Thank you for joining me.
Thanks, Mike. Take care.
All right, have a good one.